In Florida, candidates are making their final pitches ahead of tomorrow's primaries. In New York, it'll be up to voters to decide whether House candidates in one key race, pitting two veterans against one another due to redistricting. Congress members Jerry Nadler and Carolyn Maloney are facing each other in the 12th District. Nadler leads the House Judiciary Committee, while Maloney is the head of the Oversight Committee. In Florida, possible opponents for Republican Governor Ron DeSantis include Democratic Congressman Charlie Crist or State Agriculture Commissioner Nikki Fried. More supply chain woes. The UK's biggest port is facing a strike from its workers when it was already operating at 10% capacity. Bloomberg's Lizzie Burden is on the scene.
You've got an 8-day strike, 2,000 workers. They say they're not going home until they get a 10% pay rise because you've got double-digit inflation here in the UK, but it's going to be disruptive. There's an estimate from the Russell Group that it's going to affect $800 million worth of trade.
That's Bloomberg's Lizzie Burden. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. That strike over in UK, talking about wanting some higher wages, right, in a case of unbelievably high inflation over there in the UK and more. Speaking of that, and speaking of salaries, this story by Alex Tanzi caught our attention. Alex, of course, of Bloomberg News, talking about the average reservation wage, or the lowest pay level that Americans would be willing to accept for a new job. It's basically when the supermodels are like, I'm not going to get out of bed unless you pay me $10,000. Well, basically, an American is saying, I'm not going to accept a new job unless I'm making at least around $73,000 a year.
And so that average reservation wage rose actually by 5.7% from a year earlier. Of course, this is according to a survey by the Federal Reserve Bank of New York. This is what this whole conversation that we're talking about, the strength of the labor market, how sort of it feels like bargaining power has shifted back to workers. This data is just sort of reinforcing that people are saying, pay me, hello.
Yeah, exactly. And this self-reported reservation wage has climbed faster among men and younger workers since the pandemic began, according to the New York Fed survey. That's the folks who do this. It's conducted 3 times a year. The overall figure, by the way, down slightly, though, from a series high of $73,283 in the last study in March. So it's come down a little bit. But, you know, it's a tight labor market, workers asking for more, demanding more in terms of a lot of different factors, including salary, but they're also dealing with inflation that is eating into, even if they're getting a bump up in salary, a lot of times it's still not keeping pace with inflation.
What's interesting is that the latest survey did show a widening split by gender. The reservation wage for men jumped to about $86,000. For women, it actually declined to around $59,000.
That hurts.
It does hurt. It kind of feeds into what we've been talking about, all this great issue from Bloomberg Business Week over the past couple of weeks, just that it's getting harder to be a woman.
That's right, and women are losing ground on so many different levels. All right, you are listening and watching Bloomberg Business Week on this Monday. I'm Carol Massar along with Katie Greifeld, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We've got less than 13 minutes until the closing bell. The equity market is in retreat. Bond market has also been under pressure throughout the day ahead of what is likely to be a very hawkish speech on Friday from Fed Chair Jay Powell. He'll be speaking at the Fed's Jackson Hole Symposium, and he's likely to emphasize the threat of higher inflation and the Fed's commitment to fighting it, even if it means pain. Dow Industrial Average right now down 2%. The S&P 500 weaker by about 2.3%. The NASDAQ Composite is off about 2.7%. In the bond market, we've got the yield on the 10-year above 3% for the first time in about a month. We're trading 3.02% with a gain in yield terms of more than 5 basis points, and a 2-year at 331 higher by more than 8 basis points in yield. There's been a lot of volatility in the crude oil market today. The Saudi Arabian oil minister earlier helped to take the market from session lows when he said extreme volatility and the lack of liquidity in the oil patch, particularly as it relates to crude oil futures, really is disconnecting prices from the fundamentals, and it may force OPEC Plus to act. We finished the regular session at 90.23, although at the low point of the day, 86.60 in WTI. That move up in rates strengthening the dollar quite a bit, with the Bloomberg Dollar Spot Index rising about 0.6%. And look at the euro breaking parity with the greenback, 99.41 U.S. cents, with a loss of 1% against the dollar. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You are listening and watching Bloomberg Business Week. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Liz Truss, who looks likely to become the UK's new Prime Minister, has stirred controversy with recent statements on the Bank of England. To gather support in the Conservative Party's leadership contest, she's proposing a departure from business-as-usual economic strategy and wants to review the central bank's mandate. Nobody would claim all's well with Britain's monetary policy, but calling the bank's independence into question will only dig the economy into a deeper hole. Undermining its credibility is also likely to backfire politically. The Bank of England is not above criticism. It was too slow to raise interest rates and should learn from its mistakes. But it has also been faced with enormous economic shocks that have made its job exceptionally difficult. Truss should not make its job even harder by interfering with its independence. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody, just about 9 minutes away from the closing bell on this Monday. And as Doug just mentioned, equity is hovering near their lows of the session, just rounding off of them. But in particular, we're seeing the NASDAQ down about 2.6%, so down the most on a percentage basis when it comes to the equity trade. So let's get to it with George Schultze. He's founder and CEO and managing member of Schultze Asset Management. They invest in distressed assets. He joins us on the phone from Harrison, New York, here with Katie and myself. Hey, George, good to have you here. I am curious when it comes to the distressed asset area. Are you finding more and more opportunities out there?
Hi, Carol. Great to be back.
Yeah,
we're finding more and more opportunities. There's certainly a tightening environment. You see interest rates climbing. You have inflation. It's the macro environment, the war in Ukraine. It's really creating a bunch of winners and losers across the planet. And so we're seeing more bankruptcies. We're seeing more distress. And I think it's going to keep picking up from here going forward for a number of quarters.
And where specifically are the most losers? In your case, I would assume those look like opportunities. Where are you seeing the most distress, would you say?
Yeah, so in our view here at Schulte Asset Management, those companies with a significant amount of leverage seem to be particularly poorly positioned in this environment where, growth is slowing. We're likely to enter a recession, or maybe we won't. It's hard to predict for sure, but reasonable minds think there's probably a 30% or 50% chance of recession in the next 12 to 24 months. And so you have interest rates climbing. It's a stagflationary environment. So those companies with adjustable rate debt, will wind up having a harder and harder time making ends meet and making their payments.
All right, so
lots of companies.
Oh, I'm sorry. Go ahead, George. No, finish, please.
Yeah, I was just going to say, lots of companies borrowed a record amount of leverage during the go-to-go days in the last call it 48 months and through the COVID pandemic. And now I think you're going to see a little bit more of a reset. So there'll be some good opportunities short selling those companies that are over-levered and facing that more difficult operating environment.
All right, so help us out. We are Bloomberg, and we love to know specifics. So give us an idea of exactly, what kind of names are you talking about? I think of a story that Bloomberg ran last week about how U.S. mortgage lenders are starting to go broke. We're talking about the U.S. mortgage industry seeing its first lenders go out of business after that sudden spike in lending rates and a wave of failures that's coming that could be the worst since the housing bubble burst about 15 years ago. U.S. mortgage lenders, are you finding opportunities there?
I think that's an interesting idea. There are other companies and other sectors too. I mean, there's some obvious ones like Revlon, which is already in bankruptcy, where there's some equity value to short. There are also some meme stocks where you've seen crazy things happening. But overall, another thing to think about is how the spike in inflation, particularly commodity inflation, will affect certain companies. Certain companies have costs that are just skyrocketing, and a number of them aren't able to pass through to their customers the higher inflationary costs that we're seeing in this environment. And so, especially over-levered companies, I'm thinking, Bausch Health Company is one of them, where the picture is pretty bleak, and they're also facing a lot of litigation and refinancing risk is becoming more and more extreme. Companies like that, I think, will find this to be a more and more difficult environment and potentially a fruitful opportunity for short selling.
Well, George, sticking with sort of the macro theme here, obviously the news of the week, at least if you're listening to Bloomberg Business Week Radio, is probably Jackson Hole at the end of the week. And I feel like the Fed's balance sheet runoff has really flown under the radar. We've been really focusing on the level of interest rates, which makes sense because the Fed has been very aggressive. But QT, quantitative tightening, it's set to step up to its maximum pace in September. I'm curious about how you're thinking about that and how it could land in markets.
That's the trillion-dollar question. I mean, the Fed's balance sheet has grown to around $9 trillion. It's never been that big. There's never been a Fed that's had that big of a balance sheet. And now, of course, we've been raising interest rates and suffering a big bout of market volatility, and then through the first 6 months of the year, and then a bit of a recovery in July and into August. But the Fed's certainly not done, and as and when they slow down their interest rate increases, because they will eventually, who knows, the long-term average rate for the policy rate is about 5%, so they still have a little bit to go, but they might slow that down, and when they do, QT is coming for sure. And we saw how that affected the markets in 2016 through 18. We'll see how it affects them this time, but it's a much bigger picture, and certainly will create a massive new supply of securities to deal with.
Hey, George, just have under a minute left here. Is there a distressed area that is on your radar that you think other investors should maybe keeping an eye on?
Sure, yeah. One thing we've focused on here at Schulte Asset Management is companies that were distressed and restructured that operate in the commodities industry. So companies that have the ability to pass on their prices through, or their higher costs through to their customers. For instance, oil and gas companies have fared very, very well, and they continue to do so. Also, companies that have event-driven catalysts that are likely to generate additional value for their shareholders have been good opportunities as well of late.
All right, we're going to leave it on that note. George, good to check in with you again. George Schulte, he's founder and CEO at Schulte Asset Management, joining us on the phone from Harrison, New York on this Monday. And we've got just a few minutes left in today's trading session. And as we look at certainly the equity side of things, we're just coming off our lows of the session, down still 2.2% on the S&P 500, almost down 2% on the Dow Jones Industrial Average. The NASDAQ down about 2.6% on a percentage basis, Katie, 327 points to the NASDAQ. So tech once again leading the downside.
And you add that all together, you do have volatility marching higher. The SIBO volatility index still low, but it's at 24. It was bouncing around below 20 last week. That definitely felt like a little bit complacent. Still there, but still volatility up.
All right, time to head over to our TV colleagues for our cross-platform coverage on radio, TV, and YouTube beyond the bell, counting you down to the close.
Security. Now we are but about, a couple of minutes away from the end of the trading day. And we're going to be tuning in with our simulcast any minute now. But of course, we are just a couple of minutes as we build towards this market close. A day where we have seen negative movement, both in equities and indeed in bonds, Taylor.
Indeed, we're taking a look at a 10-year yield, Gina. I mean, we go right back up to a 303, up 6 basis points on the day. I think, as always, in the last few weeks, that really stands out to me is a focus on a 2-year yield. You're up 8 basis points on the day, a big focus here on the Federal Reserve, and a movement, Caroline, within the front end of that yield curve.
We can now, of course, broaden out our conversation because we are towards the end of the trading day. Caroline Hyde, Taylor Riggs, Gina Martin-Adams right here, counting you down to the closing bells. But here to take us beyond the bell with our global simulcasters, Carol Massa, Katie Greifeld, in for Tim Stenovic, bringing together our TV, radio, and YouTube audiences on a day where we have some technical grinches, but it would seem that we've had no end to some of the sell-side pressure on the day, Carol.
Yeah, absolutely. A continuation of what we got on Friday. So here we are, a second day in. It does feel like there's a lot of negativity in terms of expectations of what we get out of Jay Powell come Friday. But, no doubt about it, Katie, risk off in today's session.
Risk off to the point where you have to wonder, is there something technical happening underneath the surface? Maybe it's now that we're past that 2 trillion options expiration that we saw on Friday. Perhaps there's something else afoot beyond just fundamentals. But we do know that it is an enormous week from the macroeconomic standpoint.
And it coincides with what Taylor was mentioning about the bond market. I mean, rate yields moving higher is not great for stocks, especially not great for stocks in the sectors that are longer duration. The tech stocks, the communication stocks, the consumer stocks very persistently underperforming here.
Meanwhile, as those bells ring in the 9-second countdown, we see the cheers still have to unfold over in the stock exchanges. People ringing those bells and clapping their hands on the New York Stock Exchange and the NASDAQ, but still the S&P was down by some 90 points. It looks as though we're settling up to 4,138 on the S&P, off by 2.2%. The NASDAQ, as the confetti falls, did not have a day of jubilation. We're off by 323. If you're along these markets, it's painful. We're off by 2.5%. The Dow Jones Industrial Average off by 1.9%, 641 points to the downside. And let's zoom out and look how the small caps, no place to hide today. Every benchmark underwater, off by 2.1% on the Russell 2000, Carol.
Yeah, no place to hide either when it comes to semiconductors. The Philadelphia Semiconductor Index, all 30 names in that index lower today. And speak of some underperformance, the SOX, Gina, down 3.7% in today's session.
Yeah, brutal. And frankly, very few places to hide, as shown on the GRR screen of industries here, industry groups in the S&P 500. Energy, the least worst performer in the S&P 500. Nonetheless, really a characteristic sort of decline that harkens back to those May and June days when the growth stocks were underperforming the rest. Value stocks doing okay. Growth doing pretty poorly with semis, retail, and media companies bringing up the rear today.
A lot of red. It was really tough to find some individual gainers, but thank you, Amazon and everybody else who went after Signify Health today. That stock finishing off its highs of this session. At its peak was up almost 41%, finishing the day with a gain of about 32%, soaring the most since its shares started trading last year. United Health, Amazon, CVS Health, and Option Care all said to be going after this company for an acquisition, according to those in the know. know. Now, if you take a look at the NASDAQ 100 today, top in that index were a lot of Chinese companies, the ADRs that trade here in the United States. Pinduoduo, ticker is PDD, the ADR, that was among a gainer in the NASDAQ 100 and also in the overall trade, up almost 5% in today's session. China Central Bank coming out and calling on major financial institutions to basically keep the credit flowing, to keep loans flowing and stable. This says China continues to struggle, growth slowdowns, certainly in that economy. And one more name for you, NVX, or NOVX, excuse me. ENVX is the ticker. That stock up almost 9% in today's session. Loop Capital coming out, doubling its price target. It's an electronic components company. It makes lithium ion cell batteries, and they, Loop Capital, raising the price target to 150. So that's a big boost up. The stock closing at 20 and change today, Katie.
Well, it was easy to find decliners today on a day with the S&P 500 off over 2%. Let's start with Warner Brothers Discovery. This is your biggest loser in that big index. House of Dragons debuted this weekend. It's the prequel to Game of Thrones. I don't know if you guys follow. It actually crashed the HBO Max platform on Sunday night. Just huge demand. Stock isn't doing too great today. Ford also said it's cutting 3,000 jobs this week, of course, to help fund the $50 billion it plans to spend on its EVs efforts. Most of those cuts, of course, are coming from the teams that build those traditional internal combustion engines. Again, Ford is planning to build about 2 million EVs a year by the end of 2026. Shares off 5%. And I did want to end on NVIDIA because, like Carol said, it was another ugly day for the chip sector. NVIDIA included, dropping another 5% or so today, 4.5%. NVIDIA reports on Wednesday, of course, so definitely one to watch this week.
Yeah, keep an eye on NVIDIA, all of those stocks. I haven't been tuning into the latest HBO Max, unfortunately, but I will. What has been a Game of Thrones, a Game of Dragons when you're looking at the FX market. We're currently lower across the board, and really your only kingmaker on the day is Bloomberg Dollar Index. Check that out. We're strengthening by 0.6%. Once again, all eyes on Wyoming, Jackson Hole on Friday. How hawkish could we get that sense of, no, we are not in a Fed pivot here. We are still very much focused on inflation, hawkish sentiment from the Fed, and therefore everything else goes lower as we expect still some recessionary pressures to be coming from the Eurozone. Remember, the ECB out with its minutes later this week. The Euro weakening sub-parity. We are now at 0.9944 when you're looking at the Euro versus the dollar. I'm looking also just generally across Asia, across Europe, weakening FX markets. We see actually with dollar strength, you wouldn't automatically think that commodities were doing decently, but some metals have got a bit on. Natural gas in particular outperforming 4.8% higher. That's after we saw sensational moves over in Europe once again. But this is a story of supply chain concerns, of worries about Russia, Ukraine. Zinc gets a little bit of a lift, but overall we saw oil dial back that somewhat with some bearish sentiment coming from China, the economy there, and indeed the US. I'm looking though at a day of a consistent theme globally. Yields push higher, bonds sell off, whether you're in New Zealand, the UK, or indeed Japan, Taylor.
I think, Caroline, this is so interesting. On a day within an equity market that's looking at one of the biggest one-day drops that we've had since about June 16. Remember, that's the day that the equity market bottomed out. Gina, for me, when we take a look at yields, on that day when equities bottomed out, you had a 10-year yield at 350, a 2-year yield at a 342. The 2-year right now, as you can see, pretty close to that, but a 10-year yield that isn't anywhere near that. We're only at a 303. So when you think about sort of the biggest equity drops that we've had on days previously when we've bottomed out, but a 10-year yield nowhere near where we've been previously, does that mean the rates market's behind?
Possibly. It might mean the rates market is a little more confident in the outlook that the Fed is going to get inflation under control. The rates market does appear to be a bit more nervous today, specifically about the Jackson Hole meeting coming up, but also it could reflect where equities have been, right? Equities had a remarkable surge while bond yields were selling off. Much of that concentrated in some of the mega cap stocks, which make the surge look even bigger when you look at the market cap weighted index.
I'm still stuck on that point that Taylor made. That's very, very spooky that this is the biggest drop since the equity market.
Since ETF IQ.
Oof, gosh, yeah, definitely chills. I guess it's interesting to see that that people actually are sort of still shuffling their positions and making their bets heading into Jackson Hole, because what's really expected to say there? What are we really expecting Powell to say? I feel like we've heard it from the Fed governors, and maybe people are just waking up to that now.
Yeah, so much for a more dovish pivot. Meanwhile, let's get back to some of the micro data as we absorb the macro. I'm looking at Zoom Video, seeing its full year adjusted earnings per share at $3.66 to $3.69. That's a downgrade coming from Zoom, and we're falling off by 5.5% in after hours. They're seeing their full year revenue to be $4.39 to $4.4 billion. Again, a downgrade from $4.5 to $4.55 billion. Adjusted earnings per share in their second quarter came in actually better than had been anticipated, but they're pointing us forward to their fiscal third quarter, where again, it's coming in weaker than had been expected, and the revenue of $1.1 billion is shy of estimates. So overall, they say sales were way down to the back end of the quarter, so they were going to be seeing more sales at the back end of the quarter coming forward, but they say they were impacted by online business performance and a strengthening U.S. dollar, Taylor.
And really, analysts, it's shocking to see the post-market reaction. Analysts, frankly, had been looking at this. With this 9% year-over-year growth of only $1 billion, that was some of the slowest growth that we've had on record. Now, this is a high-growth company, so that's not saying a lot, but really sort of a little bit of a slowdown here. And they've talked a lot about competition from Microsoft Teams, as well as those macro-related headlines. Very interesting to note that we're also re-highlighting a strong dollar.
All right, little perspective, guys. Back in October of 2020, this was a $568 a share stock. It's now 97 and change. But it is interesting, you know, looking at the stock performance in the after hours, it's still down, but now it's only down about 2%, and it was down, you know, a lot more initially. So we'll see where it ultimately settles in on this Monday. All right, guys, that's a wrap for our cross-platform coverage. Radio, TV, YouTube, we do it all on Beyond the Bell. We will be back again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening, watching Bloomberg Business Week. Carol Massar along with Katie Greifeld. Tim Stenovic is off this week. Zoom shares now just down about 1.7%. So, Katie, quite a bounce. I mean, initially a pretty big sell-off initially on those Zoom results, but it looks like investors are maybe having a little bit of a change of heart, not so negative in the after hours.
Yeah, we'll see how this knee-jerk reaction shakes out. But just for some context, I mean, Zoom shares down 47% year-to-date heading into today's close. So we'll see. It does seem like this move is fading now less than 1% lower.
Yeah, company saying in the press release, we remain focused on operational discipline. Continue to expect non-GAAP operating margin of approximately 33%. Again, it's all just relative to what it was doing. But they did say in the second quarter, delivering their fifth straight quarter with revenue of over $1 billion.
I use Zoom every day.
That's the thing that's kind of wild, but maybe a reset. Maybe we're not all using it as much as we did during the pandemic. All right, Zoom shares now are up 1% in the after hours. All right, back to world and national news. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. After 54 years at the National Institutes of Health, Dr. Anthony Fauci is stepping down. Bloomberg's Amy Morris with the details.
Fauci is widely known as America's top infectious disease specialist and became the face of the country's COVID-19 health response. He served 7 presidents over 5 decades, advising administrations on West Nile virus, anthrax, SARS, Ebola, swine flu, Zika, and more. Fauci released a statement on the NIH website saying he'll be stepping down from NIH and as chief medical advisor to the president effective in December. In his words, to, quote, pursue the next chapter of my career. Dr. Anthony Fauci is 81 years old. In Washington, I'm Amy Morris, Bloomberg Radio.
California authorities believe the search for missing teen Kylie Rodney is likely over. The 16-year-old went missing weeks ago after attending a party at a Sierra Nevada campground. Nevada County Sheriff Shannon Moon says a volunteer group of divers has found what they believe is Rodney's vehicle in Prosser Lake.
We have not been able to positively identify, but it's more than likely.
Sheriff Moon says it's still an active investigation. Authorities say an autopsy will be conducted tomorrow on the body that was found inside the car. Both New York and Florida have primaries tomorrow. A key House race in New York pits veteran Congress members Jerry Nadler and Carolyn Maloney against one another, a situation that was created by redistricting. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, Katie Greifeld, Katie in for Tim Stenovic on this Monday right here on Bloomberg Business Week. You can watch us on YouTube. You can hear us, of course, on Bloomberg Radio. Hey, we're watching a couple of stocks that are moving in the after hours. It's pretty big moves. First of all, Zoom, which has been zooming kind of all over the place. Right now, down again about 4.5%. We saw it up 1%. We saw it down more than 4% right after earnings. This is the big red stickies, we like to call it, at Bloomberg, talking about the outlook, seeing third quarter revenue, $1.095 billion to $1.1 billion. The estimate out there is $1.16 billion. May not seem like a big difference, but it does look like it's kind of pulling down its outlook for third quarter revenues a little bit there, Katie.
Absolutely. That seems to be what traders are focusing on in the after hours. Zoom shares now down about 4%. They very briefly went positive, but again, we're watching people sort of place their bets in real time. Definitely some things to not like in these numbers.
Yeah, fiscal year revenue too. It looks like they're reining that in 4.39 billion to 4.4 billion. They had seen 4.53 to 4.55 billion. So reining in that fiscal year revenue. Fiscal year adjusted EPS also being pulled in by the company. Zoom now saying 366 to 369. It had seen 370 to 377. So again, that one coming in. And then on the flip side, take a look at Palo Alto Network. It is a $55 billion market cap company, I think. Let me pull up the DES page on the Bloomberg. Yeah, 50 billion, forgive me. But this stock is soaring, Katie, in the aftermarket. It is right now up about 7%.
Absolutely, yeah. Big reaction there. It seems to be the 2023 forecast, that adjusted EPS coming in $9.40 to $9.50. The estimate, of course, for $9.30. Revenue, too, looks like it's a touch higher than estimate. So tale of two earnings here.
Yeah, absolutely. The company also authorizing a further $950 million for share buybacks and declaring a 3-for-1 stock split. So some further aspects from the company that certainly can get the stock moving, which we are seeing in the after hours to the upside.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
A lot of news after the bell. We'll begin with Zoom video. The ticker symbol is ZM. Shares right now getting knocked around in the late session after Zoom cut revenue guidance for the full year. And for the most recent quarter, the numbers were pretty much in line with estimates, although the revenue guidance that the company offered for the full year, I think, is really what's driving the price action and missing by a mile what analysts had expected. At the same time, we're hearing from Palo Alto Networks, adjusted earnings pretty much at the midpoint of what the street was expecting. I'm seeing a little bit of a lift right now in shares in Palo Alto in the late U.S. session. Stock is up by more than 7.5%. During the regular session, it wasn't just the stock market, but the bond market under pressure as well, ahead of what is likely to be a hawkish speech on Friday from Fed Chair Jay Powell. He's likely to emphasize the threat of high inflation and the Fed's commitment to fighting it, even if it causes pain. Today, Dow Industrial Average weaker by 1.9%, S&P down more than 2%, and the NASDAQ comp off more than 2.5% today. The bond market struggled as well, sending yields on the long end, if you look at the 10-year, above 3% for the first time in a month. We were last quoted in New York at 3.02%. But those higher rates did strengthen the dollar quite a bit, with the Bloomberg Dollar Spot Index rising 0.6%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Doug Krisner there. You are watching Bloomberg Business Week with myself, Carol Massar, along with Katie Greifeld. Lots of news coverage over the weekend about the teacher shortage in the United States. Bloomberg, by the way, reporting that U.S. Secretary of Education Miguel Cardona urging states to use federal stimulus money to tackle a national teacher shortage that's prompted some districts to shorten school weeks in the upcoming year. So it's a tough spot for many school systems around the country. Dr. Liz Brooke is Chief Learning Officer at Lexia Learning. They focus on literacy learning, and she is with us once again on the phone from Boston. Dr. Brooke, nice to have you back on Bloomberg. You know, we last talked about a year ago. All this past weekend, I kept hearing or reading about the shortage of teachers in the United States. What are you seeing and hearing about this specifically?
Yes, thanks so much for having me back on. We recently did a poll or a survey with Harris of over 1,000 parents across the country, and 76% of parents are most concerned about the national teacher shortage. So we're absolutely hearing what you're hearing. In fact, when we asked about the top concerns, we thought it might be unfinished learning, but that really came in 8th on the list. So the teacher shortage is definitely top of mind for parents out there.
And how does the shortage get better? I mean, how do you attract teachers, or is this more about retention? I imagine the two go hand in hand.
Absolutely. I think the first thing that most people turn to, which is pay, and absolutely our teachers deserve the pay for the jobs that they're doing. But it's also about making sure that the teachers we have feel supported. And when we think about the research out there, we know that teachers are one of the most critical aspects of a child's success. So making sure that, one, they understand that they have the support to get the skills needed. So professional learning. For example, there's been a lot in the press around teaching reading and the science of reading. So making sure they feel equipped with that knowledge, as well as making sure that they feel like they have a voice in what's happening in the schools.
And I feel like we have to address, too, the elephant in the teacher's living room, and that is the starting salary for teachers in the U.S. Bloomberg put out earlier this year averaged $41,770 for the 2020-21 school year. That's a 4% decrease from the prior year when adjusted for inflation. I mean, and I want to get into more specifically the work you guys do to help teachers and assist them, and how important it is when it comes to literacy and reading. But what's the role of compensation, do you think, especially in a tight labor market where teachers could go elsewhere if they want? Why don't we value teachers more?
Right, that's a great question. I know I started my career as a first grade teacher as well, and it is absolutely something that we need to address. We need to compensate them more. But again, most folks don't go into teaching for the money, although I will say that is something that we need to think about. But it's about empowering them and giving them autonomy and the support they need to reach their students in the classroom. But absolutely, compensation is something we need to consider as well. It's a 1-2 punch, really.
And you had mentioned that, you were surprised to see fears about learning loss, for example, farther down on the list than compared to prior years. What were some of the other surprising findings that stuck out to you?
Sure. So one of the things that was surprising that 78% of the parents felt that their students were going to start this year on or above grade level. However, 51% felt that they were still experiencing that pandemic-related learning loss, and 45% of them wanted more one-on-one time with the teachers. So there was a little bit of parents feeling optimistic coming into the school year, but still feeling like they needed that one-on-one time with teachers to try to make up from that pandemic-related learning loss.
So what should we then, based on kind of your findings, what's on the mind of parents and what you're hearing from the educational community about things that we can anticipate for students and trends when it comes to the 2022-2023 school year?
So one of the biggest things we know is that students are going to need personalized learning. And that's why these parents are thinking about one-on-one time, right? You can't teach to the group. You need to really address personalized skills. And so that's where making sure that teachers understand how to do that by understanding the why of teaching reading through that science of reading, professional learning. One of the things we offer is letters professional learning that several states have adopted. But then also making sure they have programs in the classroom that can help them personalize that instruction. And one way to do that is by leveraging technology to personalize that instruction when they're not able to be with the teacher.
All right, we're going to leave it on that note. Certainly something that's very relevant as we get ready, and already kids are heading back to school around the United States. Dr. Liz Brooke, Chief Learning Officer at Lexia Learning, joining us on the phone from Boston. You are listening and watching Bloomberg Business Week. Carol Massar along with Katie Greifeld. Coming up, we're going to get to a most read story. Don't forget, we're focusing a lot on the markets and the sell-off in Jackson Hole, but we've also got another round of primaries in the U.S. tomorrow, Katie. So we're going to dig a little bit deeper into that and certainly the money behind it. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Monday. Coming up, we're going to get Katie to a most read story about the deep-pocketed donors behind Ron DeSantis.
Really interesting to contrast that with Donald Trump's strategy, which was those smaller checks from more participants.
Yeah, absolutely. Very different strategy. All right, we'll get to that in just a moment. First up, though, back to Doug Krisner and some of the news after the close. Hey, Doug.
Hey, Carol. Let's begin with Zoom Video. The company cut its revenue guidance for the full year after the bell. Those shares right now in late trading down by nearly 7.5%. On the other hand, Palo Alto Networks rallying in late trading. Look at this. Shares are up by about 7.3% right now. The security software company reported quarterly results above estimates. At the same time, the full-year forecast was ahead of consensus. And there's more. The company declared a 3-for-1 stock split. Generally speaking, though, it was a risk-off day not only for the equity market, but for the bond market as well, ahead of what is likely to be a very hawkish speech on Friday from Fed Chair Jay Powell. We're expecting him to emphasize the threat of high inflation and the Fed's commitment to fighting it, even if it causes some economic pain. The bond market struggled a bit today and forced the yield on the 10-year above 3% for the first time in a month. We were last quoted in New York at 3.02%. Shorter-term rates popped as well, with a 2-year last quoted at 3.31. We were up more than 8 basis points on the day. That, in turn, strengthened the dollar. The Bloomberg Dollar Spot Index up about 0.6%. But look at the euro, breaking parity with the greenback, 99.46 U.S. cents, with a loss against the dollar today about, let's call it 0.9%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, appreciate that, Doug Krisner. Well, we've got another round of primaries in the U.S. tomorrow. Bloomberg will be all over it into the evenings tomorrow. It is the last major primary day before the midterms, including critical battleground state of Florida. And speaking of Florida, Katie, a most read story about the deep-pocketed donors, many very familiar to the Bloomberg financial audience, that are backing Republican Florida Governor Ron DeSantis. So let's get to it with Bill Allison. He's Bloomberg News campaign finance reporter in our 99.1 studio in Washington, D.C. Hey, Bill, so tell us a little bit about Ron DeSantis and what's the big money behind him?
Well, you know, it's amazing. He's been this incredibly prolific fundraiser. I mean, you know, if you compare, he's raised more money than President Trump, or former President Trump, who was kind of the top GOP fundraiser, and DeSantis has kind of surpassed him. But what's interesting is he's raised $142 million. But the bulk of it is coming from people who are giving $50,000 and up, and this includes folks like Ken Griffin, Paul Tudor Jones. He's gotten. There's about 8 billionaires who've given him money, including Bernard Marcus and Thomas Petterfy of Interactive Brokers. So he's definitely raising a ton of money. He's just raising it from people with very deep pockets.
So what does that say, if anything, about the level of grassroots support?
In some ways, I think it's a little too early to tell. And the reason I say this is that, a lot of folks that we talked to said that he seems like he has all the qualities you would need to raise a lot of small dollar donor money. He's a culture warrior. He's running as a populist. But what it says is that he hasn't really tried to reach out and build that kind of a network yet. And, that takes time and it takes money before people start, before you can develop that kind of small donor base.
And is it crucial that he has a small donor base if he's thinking of something beyond Florida?
It's, if he's thinking of a presidential run, yeah, I mean, you absolutely have to have, those 500 donors who gave him more than $50,000, if they all gave him $2,800 or $2,900, which is the maximum federal contribution, that doesn't get you very far in a presidential primary. So, and the value of small dollar donors is that, if they give like $20, $25, you can tap them again and again. And if you have a big enough list of them, like, former President Trump has raised, $74 million from small dollar donors since he left the White House, which is just, an enormous amount of money. You could fund a primary campaign with that. And that's the kind of base that he would need.
Hey, Bill, just school us a little bit about fundraising. I mean, isn't it typically, is it typically candidates that a lot of their money is from a few large donors, or, is it more like the Trump way? So give us an idea in terms of, if we look at some of the more well-known candidates of recent past times, whether it's running for the president or some other well-known positions.
It really does depend. I mean, there are candidates who rely on those maxed out donors, and they have the high dollar, the $2,900 fundraisers or $2,500 back in the day. And, candidates like Mitt Romney, who won the Republican nomination in 2012, relied incredibly heavily on those maxed out donors, whereas, somebody like Bernie Sanders, who's been unsuccessful twice, was largely small dollar donors. I mean, most fundraisers would say that it's best to have kind of across the board support. You can have those high dollar fundraisers, you can have the small dollar fundraisers as well. And usually winning candidates tend to have that sort of balance. Like Barack Obama definitely did in both 2008 and 2012. George W. Bush, who kind of had the reputation for being a high dollar fundraiser, had tremendous support in small dollars, most of it by direct mail back then. But it was a lot of evangelicals that he reached out to in 2000 and 2004. So it's really having the balance of both that keeps your campaign well funded.
And so, Bill, we've talked about small donors, we've talked about billionaire donors. Tell us about DeSantis' relationship with corporations and with businesses specifically.
It's kind of fraught because, here's, on the one hand, he's been very pro-business. He reopened all the businesses, much earlier than other state governors did because of COVID restrictions. But at the same time, he picked the fight with Disney, and they have this long-standing arrangement with taxes. Disney, of course, opposed a very controversial bill called the so-called "Don't Say Gay" bill that limited kind of what teachers could say in classrooms to children about sex education. Disney said that they were very much opposed to the bill. And he kind of lashed back at them and said that, and basically enforced through the legislature this measure that, basically puts that tax status for where Disney World in Florida is, puts it at risk. And, I think, we talked to some folks who said, a lot of businesses, on the one hand, they support him for, keeping things open. On the other hand, they're tired of being, told what to do by him.
Hey, just got about 30 seconds left, Bill. So in doing this story, reporting it out, first of all, I was kind of shocked that he had raised more money than Donald Trump. But what's the net takeaway, do you think, for our audience as we think about, with the midterms just a little ways away?
Well, I think the one thing that kind of gets lost in this is that he's raised about 10 times as much as his nearest Democratic competitor, which is Charlie Crist, who's raised about $14 million. So DeSantis definitely has a huge financial advantage if he's, before you talk about 2024, he has to win in 2022, and he seems well positioned to do that.
Well, a really great story, a great read, and so relevant, especially with the primaries in the U.S. tomorrow. Bill Allison, thank you so much. Bill is campaign finance reporter at Bloomberg News, joining us from our 99.1 studio in Washington, D.C. And we're going to stay there because it's time for another update on world and national news with Nancy Lyons. Hey, Nance.
Thanks, Carol. Dr. Anthony Fauci, who has served as an advisor to 7 presidents and spent more than half a century at the National Institutes of Health, says he'll leave government service by the end of the year. Dr. Asha Shah is director of infectious disease at Stanford Health and says Fauci leaves quite a legacy.
He stays on point. He sticks to the facts. He guides, the country the right way in terms of the clinical knowledge, the epidemiology, the data, everything is evidence-based. And that's nice to see in someone holding a position that he holds.
Dr. Asha Shah tells Bloomberg it'll be tough to fill Fauci's shoes. He says he's not retiring in the classic sense, since he still wants to travel, write, and encourage young people to pursue government service. Diplomats from the European Union and Iran may meet this week to discuss saving the 2015 nuclear accord. EU officials say Iran has sent a reasonable response to their latest proposal. Bloomberg government's Emily Wilkins has more.
One advisor to the Iran negotiating team says that Tehran wants to ensure the U.S. will pay a price if they withdraw again from the agreement, as it did under Trump. But at this point, there do seem to be some optimistic signs that they might be able to get back to an agreement on the nuclear deal.
Bloomberg government's Emily Wilkins. President Biden spoke yesterday with the main European countries involved in the nuclear talks, Germany, France, and the UK, on the latest attempts to salvage the accord. Today, a State Department official said there are still some outstanding issues that need to be resolved. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Master, along with Katie Greifeld, who I did not know was a big Game of Thrones fan.
Yeah, no.
Were you like
big
obsessed
time.
with it?
I watched the first season and then I stopped watching until the last season. Then in the run up to the last season, my husband and I were like, holy smokes, like we want to participate in the cultural moment. We have to watch everything. So we did. And I loved it up until the last episode. I know that you're not like.
I haven't watched, I tried to, and everybody's like, you got to go back and try it. So maybe I will go back again and give it a second. I gave, Ozark a second run too. And I loved it.
I loved Ozarks. But we're talking about Game of Thrones because House of the Dragon.
Have you watched?
I haven't watched it yet.
What's up with you?
Apparently, I would have had a hard time doing it because actually, so many people went to HBO Max to watch this Game of Thrones prequel. It actually overwhelmed the service for some time. On Sunday night, there were more than 3,000 outages reported across the global monitoring service Down Detector as of 9 p.m. in New York, just as House of Dragons was released.
Meanwhile, the parent of HBO did come out. A representative for Warner Brothers Discovery, the parent of HBO, put out a statement. The show is being, quote unquote, successfully viewed by millions of subscribers. We're aware of a small portion of users attempting to connect via Fire TV devices that are having issues and are in the process of resolving for those impacted users. So they put this out. But man, if you were like looking to watch, have you ever done that where you're, and it's just like cycling?
It's very rare. I think like Harry Potter is like one of the few things I cared about enough. But in any case, House of Dragon.
I've gone back and watched that with my daughter and loved it.
Oh my gosh,
several times.
I was such a huge Harry Potter fan. House of Dragon. It arrives more than 3 years after the last episode of Game of Thrones, which alone drew 19.3 million viewers. That was a record for HBO. This prequel, it's set roughly 170 years before and focuses on the Targaryen family's bloody turmoils. It's a great show. I love it.
Wasn't it like the last episode that everybody got like ticked off about?
Everyone was so upset. It was also so dark. There was
the whole last season? Okay.
The whole last season.
Sebastian said it was the whole last season.
Yeah.
All right. I'm going to put this on my to-watch list. You are listening and watching Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Pretty big news after the bell. Let's begin with Zoom Video. The company cut its revenue guidance for the full year, and right now the stock is down by more than 7.8% in the late U.S. session. We also heard from Palo Alto Networks. The stock is rallying right now by nearly 9%. This is the security software company. It reported quarterly results above estimates, and it gave a full-year forecast ahead of the consensus. Plus, on top of that, Palo Alto Networks declared a 3-for-1 stock split. Generally speaking, in the regular session, it was a day of the avoidance of risk ahead of what is likely to be a hawkish speech on Friday from Fed Chair Jay Powell. He is likely to emphasize not only the threat of high inflation, but the Fed's commitment to fighting it, even if it causes some economic pain. We had a bit of a struggle in the bond market today. The yield on the 10-year moved above 3% for the first time in a month. We were last quoted in New York at 3.02%. That helped to give the dollar a lift. The Bloomberg Dollar Spot Index was higher by 0.6%. The index gaining for a fourth straight session. On the other hand, a lot of weakness in the euro today, a 2-decade low. We were down 1% against the greenback, 99.43 U.S. cents. In the terms of the oil market, WTI, a volatile day of trading. The Saudi Arabian oil minister said extreme volatility and the lack of liquidity in crude oil futures kind of allowing the market to become a little disconnected from fundamentals, and OPEC Plus may be forced to act. We were last quoted in New York at 90.23. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, really appreciate that update. Well, last month, Bloomberg reported on how global funding to startups fell about 23% in the second quarter from the first. This was according to a report out from CB Insight. So we wanted to check in with a member of the VC community. Aidan Madigan Curtis is partner at Eclipse Ventures, a VC firm focusing on what they call essential industries, diving big into the digital age. She was, by the way, part of the team at Apple that scaled up the first ever Apple Watch and joins us via Zoom from San Francisco. Aidan, really nice to have you here with Katie and myself. How are you and how is your world right now?
Hey, it's great to be here. Thanks. I'm great. And I heard you quoting some of those stats. I think it's really interesting, certainly what's going on right now. But for what it's worth, while we did see funding kind of in VC drop as a whole, 23% quarter over quarter last quarter, it was also the 6th largest quarter of VC funding into startups ever. Wow. And I think we're talking about $105 billion into sort of great new companies. And I think that even in some of the toughest times, we see some really exceptional companies getting built. For example, LinkedIn was started in 2002, as was Atlassian and Procore, or Airbnb in 2008 and Twilio in 2008. I think, sometimes the very best companies actually get built when times are toughest.
And Aidan, I'm looking over the notes that you sent us, and you write that physical industries are ripe for VC investment. What exactly is a physical industry?
Sure thing. Yeah, it's actually really fascinating. If you look at the, talking about kind of industry stats, the $625 billion in VC investment that went out last year, well over 80% of that is invested in, areas like in fintech or enterprise SaaS or e-commerce or biotech. When we're talking about physical industries, we are talking about the basic foundations of our society. Industries like manufacturing, transportation, the delivery of actual healthcare, or even supply chains, things that make up over 40% of global GDP. And in terms of how we think about it and why they're so ripe for investment, I think, in many ways, COVID brought to light just how rigid so many of our supply chains are. And the geopolitical climate of the last year or so has also really shone a light on how globalization, while transformative in so many ways and really deflationary in a good way for the last 30 years worth of consumer power, has also made us very interconnected and has made us very interdependent. So So we're really focused on digital transformation of some of those industries that underlie our basic infrastructure.
So what does that mean for something like, either supply chains or manufacturing specifically? I mean, I love what you're talking, and it really resonates with me because I do feel like there are certain parts of our world that have been slow to innovate and be disrupted. But I agree with you, crisis often leads, we saw it during the pandemic, to disruption and innovation and thinking about things in a different way. So how does this all lead and guide your investments? Talk companies for us, if you would.
100%. So if you think about where the vast majority of the world's manufacturing base is, it's no longer in the US. Manufacturing used to be 30% of US GDP. It's now 12% of US GDP. And that's a change, a shift that's happened in the last 25 years or so. Some of our portfolio companies are really focused on not just the concept of reshoring, but the notion of how do we actually bring real innovation to grow productivity in industries like manufacturing. For example, Vulcan Forms. It's a 3D metal additive technology using a very advanced laser structure that can actually make incredibly complex designs, for example, medical implants, or very small, tiny pieces to go into consumer electronics. And it can do it at 100 times the pace and the speed and throughput as traditional metal manufacturing. So that's a good example. That was a team out of MIT that we invested in several years ago. Greg Reichow is a partner at Eclipse and is the board member there. And we've been watching their growth with great anticipation. There was a New York Times article on them just a month or two ago talking about the crazy advances that they're making in this space. Another good example of the company called Bright Machines. It's actually a technology that we collaborated on with Flextronics and took and turned it into its own standalone company, where essentially with just very simple software instructions, we can take a very modular approach to using robotics and software, creating full end-to-end manufacturing lines that can do really quick changeovers. And we can actually produce, using that type of technology, really fast and easy end outputs and assemblies with great flexibility. So that's a good example across manufacturing. We're also really heavily invested in modernizing things like transportation and bringing also a climate focus to some of those innovations. For example, a company we've been investing called ARC Boats. It's a fully electric speedboat. We've also got an investment in a company called Axle Hire, which is a really rapid last mile logistics company. So you can sort of see across the chain, whether it's sort of end-to-end full stack approaches like ARC, which is an actual boat, an electric boat, or whether it's something like Axle Hire, which is the software stack as well as the full end delivery, how we're trying to innovate across these different industries.
Well, let's situate this in the macroeconomic environment that we're currently in, which is one with a lot of fears about recession. And when you're thinking about sort of these innovative businesses that you're looking to, how concerned are you that a recession, should it descend on the economy, would sort of stop some of that innovation in its tracks?
Yeah, I actually think innovation is really one of our only key ways out of a pretty dark-looking economic time. If you think about the power of what it sounds funny, but hydrocarbons did, from the 1950s to the 1970s, they actually allowed us to relatively cheaply really fuel crazy economic growth and crazy economic development. Globalization in the last 30 years has allowed us to reduce labor costs and actually produce much more for far less. These are the key elements that create growth. It's essentially being able to, through productivity and lower cost inputs, produce more output. I think that, given, as I mentioned, geopolitical climate and certainly the energy crisis that we're in today, our only hope is to innovate our way out of, what needs to be future growth. And so the focus on productivity is one about automation and one about technology. I think.
It certainly plays into, I feel like, one of the stories that's, on the Bloomberg terminal among our most read about kind of the end to a low inflation era, and just talks about the pushback against globalization. And so what you're talking about is maybe some of the things that we're going to need to do to help kind of rein in higher costs and a new way of doing things. Aidan Madigan-Curtis, thank you so much. Partner at Eclipse Ventures via Zoom from San Francisco. Katie Greifeld, thank you so much. She will be back tomorrow. For the whole BW team, have a good evening.
innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Elon Musk subpoenas former Twitter CEO Jack Dorsey. What could Dorsey say that would help Musk get out of the deal? We'll discuss. Plus, big tech regulators